Okay, welcome back to these sections. We are diving deeper into premium and discount concept. All right, we'll be looking at premium and discount for the past few videos now, and we are getting deeper. All right, but not just on the one time frame we'll be dealing with before. Okay, so now we want to see how smart money uses multiple time frames together to build context, refine their entries, and avoid confusion. Okay, you are also going to understand why you are seeing buy setup when the market is actually delivering sell side, and also vice versa. Okay, maybe market is actually doing sell and you are seeing buy, or market is doing buy and you are seeing sell. Why is that actually happening? Okay, so this session will fix that confusion and give you clarity. All right, so don't jump any of the videos, pay attention to every bit and bit of it. All right, so a quick recap. Just like we discussed before, we said any range from swing low to swing high in a bullish concept give you what? In a bullish concept now, in a bullish context rather, gives you the discount zone below equilibrium, right? And the premium zone above equilibrium. If you don't know what swing lows and swing high is, go back to the chart. Go back to the previous video. Well, let me just do a short one. Once price is moving in an uptrend like this, the difference between this low to this high is what called the range. All right, so this is the swing lows. Market will form a 3-candle pattern formation I have said here, or an engulfing candle here that will form a beginning of a continuation trend. And when the trend actually ended at this point, you want to see price when it ended. Okay, so that is the range. So the difference between here and here is the range. So we expect that price above this 50% here is what called your premium in a bullish market, and below this 50% here is what called your discount. And we said that we don't want to see you buying in premium. So if I drop my Fibonacci, use the Fibonacci to drag it. I don't want to see you buy in premium. I don't want to see you jumping into the market in premium context. I want to wait for market to come into the zone, the discount zone, then you buy. All right. So, and here's where most people get confused. That is multiple time frame analysis. Okay. So we know that for these two time frame, if you don't understand time frame, go back to the video on understanding time frames or multiple time frame analysis we've done before. Go back to the videos and watch what time frames are. But let me just do a short recap on time frames here. We said that it takes on candlesticks on every time frame here. It says what happens per what's it called, per season. Okay, 1 minute here means that it takes 1 minute for one candle to finish forming, and on 5 minutes it takes 5 minutes for one candle to finish forming. That means for a 5 minute time frame, you will see 5 of 1 minute candles inside the 5 minutes of time frame candles. All right. So also according to all of those time frames, right? Now, but you must now think like these smart money traders. Okay, they use what is called, many of you have heard what's called top-down analysis. So they use what is called top-down analysis or top-down structure. Okay, to do their analysis. So higher time frame bias, just think of it like the weekly candle. Let's take the weekly time frame now. Let's take it as the weather, then the daily as the season, the 4 hour as the current temperature. Okay, something related to that. So higher time frames, they defines whether you should be buying deep, okay, or selling rallies. Okay, so and why your lower time frames, that when I talk about higher time, I'm talking about from the weekly or from the monthly, depending on what you are trading, down to possible 1 hour. Okay, they are your higher time frames. Okay, so think of them as those your temperature, stuff like that. While your 45 minutes or 15 minutes downwards as your entry, that lower time frame, yeah, for your entry and refinement. Okay, so think of it as your microscope. Okay, where you use it to look at something more detailed. Okay, so lower time frame is where you actually confirm change your character, and you find your premium and discount arrays. That's your OB, fair value gap, super liquidity, and all those things we talk about. Then you get your sniper entries and you move alongside with it. All right. So one key principle you want to also know that bias flows from higher time frames to lower time frame. All right, while your entries are taken on lower time frame. So the bias of the market. I want to know whether market is actually going down or going up. Is best to see in a higher time frame. All right. So let's say if the daily time frame is in premium, you are looking for sell setup. So even if your 5 minutes time frame is showing you bullish movement, right? You must not take it. You must trust your higher time frame perspective. Okay, down like this market now is currently in a downtrend, right? It's continuous selling, continuous selling, and we've marked the structure from the daily time frame long ago. I think we'll be taking this trade from the eye. We'll be following the structure of teaching. You've seen that I've marked this from this eye. We've taken this, we took our entry from this eye, right? And we come it down. We're only going down to lower time frame to be picking, looking for sell opportunities. You are not, because the daily bias tell me that market is still bearish, right? And it will keep still bearish to as low as possible, right? Because if I still mark what was the range that produces this high, it is not this one. I don't take this one. I will not take this one. This one is not really something for me. So I can take this as average, or you already see very well. I can still use this one if I want to go deeper, because this is a very sweet leg. Like, let me say, this market like this, bought and come to this place, to this eye. Now this eye now, look at now. Now when you mark this eye, you will see that price on this daily time frame is still on premium, right? Because it's still below, it's still above this equilibrium position. Yeah, above this equilibrium position. So which already tell my bias that, oh, gold, for now what I'll be looking for is sell opportunity, because the swing that produces the swing that produces the highest high of the chart shows that price has not retraced down to discount or discount. Okay, and if I actually take it, okay, you say, some people say, okay, what about this one that has come down here and it actually came to a fair value gap? Imagine, see, it even came to a fair value gap here, right? So even if I take this one as my point of reference, okay, if I take this as my point of reference and mark to this eye, you will still see that even the price where it is currently has not given me a discount. It's just entering a discount level, and where it is currently here, there is no any reference point I can point to. The only reference point I can point to is still within this zone here. That means gold will still, because here we serve as my inducement, which is a liquidity to market to be taken out, trapped out. So gold will still take this out, and I can now be looking at, okay, if this is an order block here, the last down count, right? The last red count before an up movement, right? If I mark it out like this zone, so I'll be looking at, okay, if there's any confluence within here, the price will still trade down to this. So this will be my what is it called? The discount price, where I can be now taking off buy scenario. So, but for now, price is still what? bearish in gold. That's what we do. So that is on good. So that is one reason why some traders. So even if my daily task, I'll say that even if my 5 minutes time frame is giving me buy setup, I will not buy. I will not be deceived. I'll be looking for market to fall in alignment with what is it called? With the trade, with the directional bias of the daily time frame. Okay, to now pick myself to join the sell trend. Okay, so to give me entry on lower time frame to pick myself. Okay, so why traders get confused? Now let's break the math. So why do traders see a buy setup in a sell zone? Okay, now I'll just list certain reasons. Number one is the fact that they always ignore the higher time frame perspective. Okay, if the 4 hours on the chart is premium, like we're saying on this day time frame is premium, right? Price is due for a drop, but you see bullish change of character in 15 minutes time frame, and you jump into the trade for long, you are doing yourself. What we'll be looking for in that reference is to go back to 15 minutes time frame and find alignment with higher time frame perspective. Okay, if I'm looking at, okay, now see what gold is doing currently. Gold is still going down, right? I would not want to just jump into gold. I want to mark what was the range that produces this leg now. If I don't want to go so much far, if I mark from here, if I say I mark from here, right? Because this one now did not get to the 50% of the retracement. So you hope you know. But if I mark from here to here, I want to join sell. I will not just join sell at this point. I can wait average to this point here, right? Above there, there's a fair value gap here. I can mark out this zone, and that price can react at this point, giving me my confirmation to join another entry to continue to the downside of gold. And obviously, you can see that this one, for instance, now this price leg here did not even retrace to 50% from this high after a range, because this is a range now to this low. See price here. This did not, of course, there are other conferences here we'll discuss later. Other conference like this one, and this is something that very, very essential here. This small consolidation here, okay. Small consolidation here. It just, let me just say it here, just a rally drop rally demand pattern whereby we expect that price form a rally, right? It just do a small consolidation, then rally away, right? Price will continue come back to that zone and then continue downward. We'll teach that in some other classes ahead, but that's why price actually reacted from this point. I'm sure you don't know. Okay, then so you come down to lower time frame 15 minutes and then you pick for your sorry, excuse me, and you pick your entries in that part, correct? So you don't want to get stopped out because your entry went against your higher time frame perspective. All right. So another reason is because number two is that no clear range defined. You do not know how to mark your clear range. If you don't define your swing high or swing low, your range very well, you won't know where the equilibrium lies. Okay, you won't know where the equilibrium position lies. So you can't tell if you are in a premium or you are in a discount. So you must learn to train your eyes to mark out your range. Okay. Then another reason is because traders fail to wait for liquidity sweep. Yes, like this one now. If price is to retrace now, you will see that if I pick from this low, right, to this low here, even though it's slightly above this equilibrium, right? It's a slight equilibrium, but it's still not a very, very bad market. Might come back, and gold can come back and do something and trade into this zone like this here before coming down. because you are seeing a very great imbalance here after a market range break out of consolidation state, right? Broke out of this consolidation state, call it a consolidation state. Market broke out of consolidation state. Then you see what up after it breaks out. You can return back here, come and feel this FVG here, and before going down again. So gold can do like this. Okay, you can do like this. So you want to see the fact that price actually come back to your very discount premium for a sell before you can sell your market. So you want to wait, because this will serve as your liquidity sweep for you. So if you just jump and enter the market, you are a gunner. So you want to see other conferences and confirmation. Then zoomed in trading. When I'm zoomed in, some people just look at only 5 minutes time frame candles and they make decision. All right, they look only at 5 minutes candles, make 5 minute candles make, and they make decisions. All right, no, that will not work that way. It will not work that way. So you must take note that any lower time frame setup that doesn't align with higher time frame PD and premium at discount, right? It's either a noise or it's a trap. Okay, it's either a noise or it's a trap. So in a real life practical example now, so you go start on your daily time frame. Okay, you see that price move from swing low to swing high. Draw your Fibonacci of 0 to 100%. Okay, whether price is now, if price is in premium, you look for sell opportunity on lower time frames. Okay, and that means that you can you can refine it and go to your 4 hours time frame. Okay, look for the PD array in premium, maybe fair value gap, order blocks, bearish order block, liquidity above equal highs. Then you spot to change your character on 4 hours time frame. That might be your first confirmation. Then you now go down to 15 minutes time frame. Okay, then wait for price to come into that zone. What I mean is, let me show you so that it won't just be as if I'm talking. Not just as if I'm just talking. Let's see. This is a daily time frame. Okay, I'm assuming now. What was the price? What is price doing? Price is currently in a premium, right? Sorry. So if I mark, let me say I mark from here, which is, I guess I mark from here, right? Now, no.
Okay, so I just actually did a voiceover for this one because my audio was lost. So I will definitely you'll see the continuation of this video in the next few minutes. Okay, so just pay attention, watch the way the analysis is going on. So possible my audio may not be visible, audible enough, but just pay attention to watch your screen on how the analysis is going on. Meanwhile, you will definitely see the future after play of the outcome of this analysis in the next few minutes. All right, so pay attention. Thank you. Just watch.
That's chant came when we're in the middle of deeper experience preparation. Somebody's going to bask in the love of God. Are we ready to worship tonight? Ayadaba soka barande de bushata. Eh, kapana tinini tubarata eh. Ayate. Anene nani anana toko pali ananesh. Tell your neighbor it's deeper. Are we ready?
All right, so sorry, I have to post sorry come up. I have to wait for this video to be recorded the next day so you can get a full analysis of what we were discussing yesterday. So if you check previous continuation of yesterday's video, though previous video, I'm going to merge these two videos together so you can understand what I mean. You know, initially on a daily time frame, I was actually marking the zone before I actually also there will be much confirmation there. I was telling you that okay, I was telling you that if I'm actually marking this zone of this eye to this eye, right? And I see that this price of market is still in a premium, right? It's still in premium, so I'm looking for sell opportunity. I said that I will have to wait for price to come into this area that I actually mark out here. I think we marked it out on 15 minutes time frame. So whereby I was saying that this place, if you check the, if you follow the video, you will see that here has been taken out. So I was saying that here price will take this out as inducement or as liquidity. Why? The price will take it out as liquidity and come into a fair value gap. Of course, this was not the fair value gap, it actually tapped into it initially. They really tapped into this FVG here. But I think if you check very well, let's see what happened on 1 hour time frame. Okay, good. You see very well on 1 hour time frame we have a fair value gap here. Okay, you can see this, the difference between this wick of this candle and the wick of this candle. So price actually came into it and actually trade within that zone. And your candle formation pattern, you can see them on lower time frame here. But here if you can see it, you can see the 3 candle pattern formation, right? Of a swing high was created. You miss this entry, it's come again to create it again for you here, and that swing high for you to enter to join the trade of this market. All right, so I think that would be all on premium discount with multiple time frame analysis. I will just end it up here. So your assignment, you're going to explain what is meant by premium and discount zones in context. Okay, explain it. Then secondly, why is it important to use multiple time frame analysis in rather than rely on just one time frame? We'll explain that one too. Then state and explain 3 reasons why a trader might see a buy setup in a sell trade and or vice versa. Okay, then based on what I've talked about here, arranged the following institutional reference point in order of preferences, that is the fair value gap, order blocks, mitigation block, breakup block, and liquidity. Okay, then what is equilibrium in price range and how is it used in premium and discount analysis? What is equilibrium in price range and how is it used in premium and discount analysis? Okay, then let me add practical sections. So choose any currency of your peer, okay, whether EURUSD, ZAR USD, anyone, okay. Mark out a 4 hours or daily range, that the swing high to swing low, like we have done, swing high to swing low. Then identify the equilibrium level, highlight the areas that falls in premium and discount zones, okay. Then on the 15 minutes time frame of the same pair of that same market you are doing, right? Identify the recent buy side or sell side liquidity sweep. That is, identify the liquidity sweep in that respect, whether it is sweep of liquidity above or sweep of liquidity below. You know, if it's for a sell trade, you want to see that market takes out, like this one we did here. We said, let me drop this too. I said that market is going to sweep out this high as liquidity. Okay, it's going to do that. That means I don't want to use Even despite that this one looks like an order block, I said that it does not get to, if I mark the range, initially the price was actually ranging from this low high, right, to this low, right? I said that this market did not reach 50%, right? And since it didn't reach 50%, exactly at that point, that means it will become for me an inducement or liquidity sweep. So which market actually come and take it out today? You can see now, market was take it out today, and market actually come into the zone and tap out. And you see market failing to break this. I already tell you possibility the market is going to go downward, continue down from this position. All right. So you do that, then ask yourself if there's any reaction in the fair value gaps or other block after the liquidity was taken out. After the liquidity was taken out, that means after this I was taken out, this is the I on one outer frame, okay? After it was taken out, is there any fair value gap there, or is there any other block close to it? If there's no other block, then what is close? Fair value gap. Like this one now, there was no other block here. So the next reference point will be fair value gap. Then okay, there was a fair value gap here, it's very close to it. Are you getting me? All right. So then ask if the buyers also identify higher time frame perspective, like the price actually respect higher time frame buyers. You understand what I mean? Maybe it goes in that direction of that higher time frame. Okay. Then lastly, you create a 2 minute voice over video or voice video explaining how you use premium at discount with multiple time frame analysis to find smart money entrance, right? So explain that in 2 minute video. Not just recording yourself, you are recording your charts and you are explaining to me, doing it like a top down analysis of it for me. Okay, so I think I will stop here and see you in the next class. And don't forget to subscribe if you have not subscribed. Don't forget to share, likes, comments, ask your questions if there need be. If you get confused anywhere, let me know. All right, see you when I see you again. Bye.